So, have you ever tried learning a new language, maybe dabbling in French or Spanish, and found yourself, captivated by a little green owl?
Yeah, Duolingo, right.
Exactly. But today, we're actually taking a deep dive into Duolingo Inc., the company, symbol DUOL. We're looking at it as a stock. Our mission here is pretty straightforward. We're going to unpack this comprehensive stock analysis report we have, plus recent earnings transcripts, market news, basically distill the key insights for you.
Right.
The goal is really to give you that shortcut, to cut through the noise and get to what makes Duolingo tick as an investment, understanding their business, their financial health, the core stuff.
And that's exactly it. Stock analysis, it can feel like wading through this maze of complex data, right?
Sure.
So our job is to navigate that for you, pull out those crucial nuggets of knowledge, the things that really shape an investment thesis. And Duolingo, well, it's a fascinating case right now.
Yeah. How so?
Well, especially with its recent volatility. I mean, we just saw it dip, over 5% on the last trading day? Oof.
Yeah. But look at the 52-week range. It's huge, from like $185 all the way up near $545.
Wow, that's a massive swing.
Exactly. So there's clearly a lot going on under the surface, lots of dynamic movement, and investor sentiment to explore.
Okay, absolutely. So let's start with the basics, the foundations.
Yeah.
Duolingo, Inc., DUOL, it's in the technology sector, right? Software application industry.
Correct.
And most people know them for that language learning app, courses in like 40 languages. But they're doing more now.
They are strategically expanding, actually, into total new subjects like chess, math, and music. It's a pretty big move.
Interesting. Okay, founded 2011, based in Pittsburgh. Now, the numbers. Stock's currently around $322.93.
Yeah, that's the current mark.
Which gives it a market cap of, wow, $14.77 billion. That's substantial.
It is.
So from that high-level view, what's the overall financial health picture? Does the balance sheet look as, well, solid as their brand?
From a pure financial snapshot, Duolingo looks remarkably robust, really strong.
Their trailing 12 months revenue, TTM revenue, that's at $885.15 million. And they've reported a net income of $117.18 million.
Positive net income, okay.
Right. And what's really compelling, I think, for an investor is that balance sheet. They are sitting on a huge cash position, $1.1 billion in cash and short-term investments,
right,
which gives them a net cash position of a full $1 billion.
$1 billion in net cash.
$1 billion. And contrast that with their total debt. It's tiny, just $93.84 million.
Wow.
So, to put that in perspective for you, their debt-to-equity ratio, it's just 0.1.
Practically nothing.
Almost zero leverage. It indicates a very, very strong financial position. Gives them a solid cushion, lots of operational flexibility.
Okay, let's unpack this a bit, because that sounds incredibly solid on the surface, like textbook strong balance sheet. But, often when a company's fundamentals look this good, the stock price already reflects a lot of that optimism, doesn't it?
That's the key question, always.
So what are the analysts saying? The pros who crunch these numbers day in, day out. Where do they think this stock could actually go from here? Are they as bullish as the balance sheet looks?
Yeah, you're hitting on that expectation point. And the analyst consensus in our report, well, it does suggest a notable upside from where it's trading now.
Okay.
The price target from our analysis is $373.92, and the fair value estimate, even higher, $407.10.
So both quite a bit above the current $322.
Exactly.
Yeah.
But, and this is crucial for you to understand, let's look at the valuation ratios that get us there. Their TTM price-to-earnings ratio, the PE, it's 126.49.
Whoa, 126.
Yeah. And the price-to-sales, PS ratio, is 16.69.
Okay, explain those a bit. 126 PE means?
It means investors are currently willing to pay $126 for every $1 of Duolingo's current annual earnings. These are, well, they're very high multiples.
Right, that sounds high.
It reflects incredibly strong expectations for future growth, future profitability. Essentially, the market is pricing in years of success already. It's baked in.
Got it. So the optimism definitely there, reflected in the price.
Deeply rooted, I'd say. And it's rooted in their recent performance, which I think we should dig into next. It provides the context for why those targets are so high.
Perfect timing. Because speaking of hitting high expectations, here's where it gets really interesting. Duolingo's Q2 2025 earnings, just out August 6th, you said they were strong.
Strong is an understatement. They absolutely crushed it. The numbers coming out of that report were truly eye-popping.
Okay, lay it on us. What stood out the most?
I mean, just outstanding performance across the board in Q2. First off, the financials. Revenue surged 41% year over year, came in at $252.3 million.
41% growth. Wow.
And total bookings showed the exact same strength, up 41% as well to $268.0 million.
So demand is strong.
Very. And it wasn't just top-line growth either. Net income, up a remarkable 84%.
84%.
And adjusted EBITDA, that was up 64%.
Yeah.
And maybe even more importantly, the adjusted EBITDA margin expanded significantly, hit 31.2%.
Okay, so they're becoming more profitable as they grow. That's operating leverage.
Exactly. Strong indicator of that. And then beyond the financials, the user growth was also just phenomenal.
The DAUs and MAUs.
Yep. Daily active users, DAUs, grew 40% year over year. That's 47.7 million people using it daily.
40% growth in daily users.
Monthly active users, MAUs, up 24% to 128.3 million. And crucially, the paid subscribers jumped 37% to 10.9 million.
So they're converting free users to paid too.
They are, and effectively. And all this strong momentum, it led the company to confidently raise their full year 2025 guidance.
Oh, they raised guidance. That's always a good sign.
It is. They now expect bookings growth around 32% for the full year and revenue growth of 36% at the midpoint, plus an adjusted EBITDA margin around 28.75%. So yeah, very confident outlook.
Okay, so the momentum is clearly there. Huge growth, converting users, raising guidance. But what does this mean for their long-term staying power? User numbers and revenue are great, but how do they keep this up? How are they holding on to users and growing in a way that's sustainable, hard for competitors to copy? Is there some kind of protection around their business?
That's a great question, and it brings us right to this concept of an economic moat.
Ah, yes, the moat. Warren Buffett loves talking about moats.
Exactly. For those maybe unfamiliar, it's basically a sustainable competitive advantage, something that protects a company's long-term profits from rivals. Now, Duolingo, our report says, possesses what they call a narrow economic moat.
Narrow. Okay, so not impenetrable, but still an advantage.
Right. It means they have distinct advantages, but maybe not insurmountable ones. And this moat, it's driven primarily by three key things.
Okay.
First, just incredibly strong brand recognition. Everyone knows that little green owl, right?
Absolutely. It's everywhere.
It's dominant in mobile learning, attracts this massive user base just through brand awareness. Second, and this is maybe the most crucial part, their proprietary AI and content engine.
The tech behind it.
Exactly. What makes their AI really unique isn't just the algorithms themselves, but the data. They have this massive, constantly expanding data set of how millions of people actually learn.
Right. Every mistake, every lesson.
Every single interaction feeds back into their system. It creates this powerful feedback loop, allows for incredible personalization, rapid content generation. It's a deep data moat that's just incredibly hard for a new company to replicate from scratch.
That makes sense. The data itself is the advantage.
A huge part of it. And third, there are inherent user switching costs.
Meaning it's a pain to leave once you've started.
Pretty much. Once you're deep into learning Spanish or, mastering chess on Duolingo, you've got your progress, your streaks. It's a real psychological effort and a practical one to just jump ship to another platform. It encourages stickiness.
Yeah, I can see that. I wouldn't want to lose my streak.
Nobody does.
Okay, and you mentioned those new subjects earlier, chess, math, music. Are these just side experiments? Or are they actually taking off? How successful is this move beyond just languages?
No, they're definitely gaining real traction. And in some cases, really exceeding expectations. The strategic expansion, it's proving highly successful, especially chess.
Chess?
Yeah, chess apparently demonstrated faster user adoption than any previous subject Duolingo has ever introduced.
Wow. Faster than Spanish or French?
Faster. It pulled in over 1 million daily active users just on iOS, just in English, right out of the gate, which is remarkable for a brand new thing.
That is remarkable.
So this whole diversified content strategy, it significantly broadens their total addressable market, their TAM. It positions them as more of a comprehensive educational platform, not just a language app.
Right, much bigger potential market.
Exactly, and they're serious about it. They recently acquired a team specifically to beef up their music roadmap. Shows real commitment.
Okay. And any other interesting product moves?
Well, yeah, another clever one was the energy feature. Remember the old hearts system?
Vaguely, yeah. You lost them if you made mistakes.
Right. It was kind of a punishment, a stick. They replaced it with energy, which is more like a carrot. It's framed as a reward for success, keeps you engaged differently. And this change, it's shown real positive impacts on user engagement metrics. DAUs are up, median time spent in the app is up, and even subscriber conversion rates improved.
Interesting. Shifting from punishment to reward worked better.
Seems so, based on their metrics.
Okay, so they're growing users, keeping them engaged. But monetization is always key, right? Especially for a business offering so much free content. Beyond just growing the user base, what smart moves are they making to capture more value, to optimize profit margins from all this positive engagement?
Absolutely critical point. And yeah, they're making some strategic moves there. One really interesting one is they're actively testing direct web purchase flows for iOS users in the US.
Meaning trying to get around Apple's App Store fees.
Exactly that. Those fees can be, what, 30% sometimes? It's a huge chunk.
Yeah, the infamous Apple tax.
Right. So by routing purchases through their own website instead, they'd only pay a much smaller fee to like a payment processor like Stripe. This could substantially improve profit margins per subscription over time.
Smart. Is there a downside?
Well, the company does acknowledge it introduces, quote, minimal loss in bookings due to increased friction.
Meaning some people might not bother with the extra step of going to the website.
Potentially, yeah. A bit more hassle could lead to some drop-off. But they clearly believe the long-term profit benefits outweigh that friction. It's a calculated trade-off.
Okay. And what about globally? Are they focusing anywhere specific?
They are. China, for instance, is apparently their fastest growing market right now.
China. Interesting.
Yeah, and that growth was boosted significantly by a pretty clever partnership they did with Luckin Coffee. Got their branding out there.
Huh. Coffee and language learning.
Whatever works, right? And they're also planning some small targeted marketing investments back here in the US to try and penetrate new audiences, people who maybe haven't tried Duolingo yet. So a balanced approach to growth, really.
Okay, wow. I mean, it really does sound like a company firing on all cylinders. The user growth, the revenue, the profitability improvements, the strategic expansion. It's impressive.
It is. The Q2 results painted a very strong picture.
But, and there's always a but, right?
Yeah.
Especially with a stock price this high. In the fast-paced tech world, every company has headwinds. What are the key challenges, the risks? What do the sources highlight that potential investors really need to be aware of?
You're right to ask. No company is without challenges, and that high growth often comes with, well, high wire acts sometimes. The sources definitely highlight a few key bear points, as analysts call them.
Okay, let's hear the bear case.
Firstly, and we touched on this, is the high valuation.
The 126 PE ratio.
Exactly. Those TTM PE and PS ratios, 126.49 and 16.69, they reflect very lofty expectations for continued rapid growth. The market is demanding near perfection. So any moderation, any slowing in user acquisition or profitability expansion, even if things are still growing, could lead to a pretty significant reevaluation by investors.
Right.
There's potential downside risks if they miss those high bars.
Okay, valuation risk. What else?
Secondly, they've seen some, let's call it underperformance in certain premium offerings.
Oh, okay. Like what?
Well, the Duolingo English test, the DET, it saw a slight dip recently. Now, that's mainly attributed to external factors like shifts in university application trends, not necessarily a flaw in the test itself.
Okay, external factors?
Well, maybe more critically, their Premium Max subscription tier.
The really high-end one.
Yeah. It currently accounts for about 8% of subscribers, but it apparently grew slightly less than expected. The issue seems to be its core feature, this video call with Lily AI tutor. It was apparently just too challenging for beginner-level users in its initial monolingual format.
Ah, so beginners couldn't really use the main selling point.
Seems like it, but to their credit, management is actively addressing this. They're experimenting with bilingual conversation options to make it more accessible. So they're iterating.
Good. What's next on the bear list?
Another point is the delayed financial impact of the new ventures. Chess, math, music, they're great for broadening the TAM, the potential market.
Right.
But the company itself openly states that a, quote, significant financial contribution is not expected for a few years.
A few years, okay.
So it implies a long-term investment period before these new subjects really start moving the revenue needle in a big way. That could test investor patience if they're looking for immediate boosts.
Got it. Long-term play there.
And related to the monetization point earlier, while that direct web purchase strategy is smart for margin.
The friction issue.
Yeah, they admit it introduces that minimal loss in bookings due to increased friction. So some users might drop off. It's a trade-off between maximizing subscribers and maximizing profit per subscriber.
Okay. Anything else?
Well, there's also been some user engagement sensitivity and even backlash risks.
Oh, like what?
Remember the CEO, Luis von Ahn? He made some comments about AI earlier.
Vaguely, yeah. Something about replacing translators?
Kind of. It led to some social media backlash, particularly in the US and among younger users. It temporarily affected user sentiment and growth.
Did they recover?
They say sentiment has recovered, yes. And the CEO clarified his comments lacked context that Duolingo uses AI to improve teaching, not replace staff, which they've done for years. They plan to gradually resume their edgy, viral content, but it shows they're vulnerable to public perception.
Right, PR matters.
Definitely. And also, that energy feature we talked about, while it boosted overall metrics.
The one replacing hearts.
You're right.
You know.
It apparently led to complaints from a minority of very high usage, non-paying users. They felt their free usage was being limited.
The super users didn't like it.
Some didn't. Duolingo acknowledges this change of version, but they basically prioritize the metrics showing overall improved engagement and monetization. Their view seems to be that heavy users who can afford to pay probably should contribute financially. But it highlights the tightrope they walk between free users and monetization.
Balancing act.
Finally, two more quick things. One is insider selling.
Management selling shares.
Yeah, there's a pretty consistent trend of low buy-sell ratios in insider trades. Like Q3 2025 showed a ratio of 0.12. For every share insiders bought, they sold about 8.
That sounds not great.
Well, it can be a signal. Co-founder Dr. Severin Hacker specifically made several sales in August 2025. Often this just means insiders are diversifying their own portfolios or taking some profits after a good run, especially with stock-based compensation. It's not necessarily a red flag about the company's future, but it's a data point investors watch.
Okay, noted. And the last one?
The last one is some legal scrutiny. You might have seen repeated investor alert press releases about investigations by a law firm, Pomerantz law firm, related to certain past statements by the company.
Right, those class action type alerts.
Exactly. Now, it's important to stress that our analysis views these as, quote, separate legal matters rather than an indication of operational weakness, especially given Duolingo's really strong financial results and operations. But, legal headlines are never ideal.
Understood. Wow, okay. That's a really comprehensive look at both sides of the Duolingo story, the incredible growth, the strategic moves, but also the very real challenges and risks, from valuation to user sensitivity to insider sales.
It's definitely a dynamic situation. High growth, high potential, but also high expectations and notable risks.
So what does this all mean then for Duolingo's long-term trajectory? If we try to connect the dots, look past the immediate quarter, the immediate challenges, where do analysts, according to the sources, see this company heading?
Well, the long-term financial projections from the analysts included in our report, they still paint a very positive picture. They underscore the confidence in sustained growth despite those risks.
Okay.
They project continued strong revenue growth, going from an estimated $748 million in fiscal 24 up to about $1.88 billion by fiscal 28.
Almost $2 billion in revenue by 2028.
That's the projection. Now, obviously, the rate of growth is expected to moderate over time. It goes from like 40% down towards maybe 20% by FY28. But the absolute dollar increase is still really significant and consistent in the forecasts.
And what about profits, the EPS?
Earnings per share are also projected to grow dramatically, from around $1.88 in FY24 to an estimated $6.48 in FY27. So that highlights a very positive profitability trend expected in the coming years.
Okay, so analysts see the path to strong profit growth. Does the company itself sound confident?
Oh, yeah. Duolingo management expresses very strong confidence in their long-term prospects.
Yeah.
They argue they are, quote, nowhere near its full TAM.
Still lots of room to grow.
That's their argument. They point out that even some of their most penetrated markets are still growing rapidly and globally. They cite 2 billion people learning languages, hundreds of millions interested in subjects like chess, math, music. They see this vast, untapped potential out there.
Okay, so what are they actually doing right now, say, in the second half of 2025 to make sure they keep growing? To hit those impressive long-term projections, what's the immediate action plan?
Well, for the rest of 2025, they plan to keep investing heavily in product development. That's core to their strategy.
Makes sense.
So hiring new grads to expand their teams, engineering, content creation, and like we mentioned, they acquired that Next Beat team specifically to accelerate the music roadmap.
Right, investing in the new subjects.
Exactly. And additionally, they plan to allocate a small, targeted, incremental marketing spend here in the U.S., just trying to reach some new audiences, further penetrate the domestic market.
Okay, so continued product investment, focused marketing.
Yeah.
Sounds like a plan to keep the engine running.
Yeah, these look like strategic, calculated investments. They're designed to fuel that sustained long-term growth we're seeing in the projections, trying to balance that immediate profitability focus with ensuring future expansion.
All right, so wrapping this up, we've taken a real deep dive into Duolingo today.
Mhm.
We've looked at its, frankly, impressive Q2 performance, its strategic moat, that narrow moat built on brand and AI, and its ambitious expansion plans beyond language.
Mhm.
But we've also looked closely at the other side, the challenges, that demanding high valuation, the nuances of getting premium tiers right, even dealing with a bit of social media heat. It's clear this little green owl is doing really big things in education tech.
It really is, innovating, expanding its reach. And it raises, I think, an important question for you, the listener, to consider.
Go on.
Duolingo's mission, right? Making education universally available, using tech and AI to disrupt traditional learning. As they keep diversifying, keep innovating, what do you believe will be the ultimate language of their success? Will it be just sheer user growth across more and more subjects? Will it be sustained profitability, margin expansion? Or will it be the sort of breadth and impact of their educational offerings? How well do you think this company, with its really unique blend of tech and mission, is going to keep translating its innovation into sustained shareholder value in the years ahead? It's something to ponder.
That is a great question to end on. How will they ultimately measure success, and how will the market measure it? Okay, if you found this deep dive into Duolingo as insightful and frankly as interesting as we did, make sure you hit that subscribe button and ring the bell icon right here on YouTube.
Yeah, definitely do that.
Your support, it honestly helps us keep bringing you these in-depth explorations, these shortcuts to being well-informed about the companies shaping our world. Thanks so much for joining us on the deep dive.